Hi, this is Zak Mir with a couple of key markets for August. The big one maybe at the moment is the Dow Jones, in the sense that the US stock market's been soaring over the past year, especially since November. And really what we've seen is any dips such as we saw in December, in February and in June were all buying opportunities. And the way things are at the moment, despite all the doomsayers, it does appear that the downside, even now in August, September, in the run-up to possible QE tapering, will be relatively small as well. I think the minimum required here for any bearishness to kick in on a justifiable basis would be back below June resistance of 15,340. Tying in with the 50-day moving average level just below it. I think if we saw a weekly close below that region, there's a chance of a retest of June support. But really, this is a market where there's really so much momentum that you would have to be slapped in the face quite hard in order to really take the view that there was a sustained pullback, even if there is let's say a 200, 300, 400 point breakdown one day and then a couple more days of downside. With the 200-day moving average rising so steadily at 14,284, you would have to regard any dip for this market as a buying opportunity and not a selling one. Otherwise, through 15,600 or 700 again, and we could run away to the upside quite quickly over the early autumn, even though it's not traditionally the best time of the year to go long. Another market and another conundrum, this time in the form of the dollar index. Here you see that this is a market which has really been in a range, 81 to 85 for much of the year. The only problem, or the sort of the interference we've had, is that all the commentators, every time it gets to the top of the range, they're saying, that's it, the dollar's going to break out, it's party time. And every time now, as we are at the moment, when we're at the bottom of the range, they come and say that the dollar's finished. I think the reality is probably something between the two. And also, from a trading perspective, you would be wanting to go long at the current levels, 81. That ties in with November to January to January resistance around the 81 level as well. So old resistance coming in as new support. And of course, we've got this trend line here from December as well, which this market looks like it's just bounced off. So really for August, September, one would be looking to buy the dollar and the dollar index and take it higher towards the top of the range again. If you're cautious on this market, you'd be waiting for a break back above the 200-day moving average at 81.66, but really there's enough evidence here to suggest that we're at the bottom of the range, and a tight stop below 80.50 should probably do the trick as far as a decent risk-reward trade to the top of the range again. That's it from me, Zak Mir. I'll be back with a couple more markets in early September.